that there are two different issues simultaneously going on that are equally important. There is a monetary issue and there is also a fiscal issue as well. A global stock market crash is giving the Fed little room to maneuver. Now, in Japan, they just had their biggest stock market crash since 1987, since Black Monday just recently take place. Other markets across the world are feeling similar effects from this, and markets everywhere had a rough start to the week. Now, the Fed is planning to start cutting interest rates in September, and people are starting to feel panicky and want the Fed to act more quickly. Now, with everything that's going on in the stock market right now, what is the Fed gonna do? So let's deep dive into this. And before we get started, let me just say that if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. So the stock market has been on shaky grounds recently. Obviously, the biggest news coming out of Japan, biggest crash since 1987, but other markets in Europe, other markets in Asia, and obviously the United States had very bad starts to the week, major drops that made major headlines. Now, obviously the job report was also not good, and at the end of last week there was a bit of a market sell-off as well based off of that recession fears, and people are starting to get a little panicky and they want the Fed to make some type of decision. Now, a lot of people feel like the Fed should cut rates, but I've also heard people know the Fed shouldn't cut rates. They should hold things steady, and there's varying opinions. What we have to realize, though, is that there are two different issues simultaneously going on that are equally important. There is a monetary issue and there is also a fiscal issue as well. It's for the longest, and obviously we're talking about the United States, but all around the world, countries have been running huge fiscal deficits on a regular basis, just going more and more into debt. Now, monetary policy is pretty straightforward. You could change rates, it's going to proper drop currencies, it's going to make borrowing cheaper or more expensive, and it has an effect on the stock market. But because fiscal deficits have grown so much in the last 10 years or so, monetary policy, even little shifts in monetary policy, have big effects on what happens fiscally for nations. And now the countries are kind of, scrambling to try to salvage their economies. Monetary policy, when these rates move a little bit, and it has a big effect, big dollar amount, because of how much debt is out there. Now, let's make no mistake, the Fed knows exactly what's going on with the stock market. They know what's going on with our stock market. They are aware what's going on in the world and how it affects us and everything. Regardless, I do not think that they will pivot off of their current course. So the idea of an emergency cut by the Fed, based off of everything that's happened with the stock market recently, or the Fed cutting rates by 0.5% or 50 basis points instead of 25 points, as a reaction to everything that's going on. And I really do think that a lot of that is knee-jerk reactions, people in the moment just kind of saying whatever in a panic. And obviously some of the videos that you see and people sell all and this is that, a lot of that is clickbait and people trying to get views. It's now, this market sell-off is big. Anytime you see biggest crash since Black Monday, that is big news. And obviously that didn't happen in the United States. That was in a different country, but we have had quite a sell-off here. Other places have as well. And that is something to take a look at. But I do not think that the Fed will pivot because the market has dropped over a couple of days. Now, let's say the market drops for weeks on weeks and we have 25% of the market is wiped out and things like that. Maybe the story changes, but I don't see that happen. Maybe it does. I could be completely wrong, but maybe the idea of 50 basis points, in September, the Fed going 50 basis points instead of 25. I can see that happening before I see them stepping in early and doing an emergency cut. Now, they have done emergency cuts before, during a global pandemic, dropping rates to zero, major world events to stabilize markets, things of that nature. The stock market dropping 5 to 10% over a given time and, fluctuating. I don't think the Fed will react to that. I think that they're going to stay the course. They're going to let the market do what it does. If they're going to change anything, it might go from 25 basis points to 50. Now, I still think that it's going to be the 25 basis points. They're going to test that out. And again, I can be completely wrong. They might do 50, and if that's what they think is warranted, then fine. But I think that they're going to stick to 25 basis points, see how it affects the actual economy, what it does to the job numbers, how it affects inflation. And if the stock market moves up and down based off of that or other things going on in the world, the Fed sees it. They know what's going on, but I don't think it's going to affect their policy as much as something like unemployment will. Now, if the unemployment numbers started to 5% increase, 10%, then it would be bigger news. But they're more so economy based, and while the stock market is important, it's not necessarily their focus. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.